In the meantime, Fed policymakers are concerned about long-term damage to the economy as a result of this pandemic shutdown. Steve Liesman joins us right now with more on the minutes of the last Fed meeting. And Steve, this is pretty interesting to hear what they were talking about around the table.
Yeah, we've had a lot of Fed officials on, Becky, and good morning, by the way. And they've been saying, hey, we're not shy about the fact that we're probably going to do more here. The minutes yesterday gave us more detail on what they might do, and maybe more importantly, why they might do it. Let's start with the first part, which is what more the Fed could do. First thing, additional quantitative easing. They really haven't launched a classic or traditional QE program. The treasuries and mortgages they purchased so far have been really for liquidity purposes, not for interest rate or economic purposes. Much stronger forward guidance, either based on a date saying we're going to keep rates low for a year or 2 years or whatever, or data-based, which is until the unemployment rate were to fall to a certain level. And maybe one of the biggest things they're talking about, and by the way, all these things they're talking about, no decisions yet on them, interest rate caps on treasuries, perhaps since the Fed, similar to what the Fed had in the war era and the post-war era, that's World War II. Now, why they might do it is more interesting, which is Fed seems to embrace a much more pessimistic forecast than I think the market overall. Michael Gapin summarized the minutes saying the Fed staff viewed the trajectory of the coronavirus as uncertain enough to mean the probability of a more pessimistic outlook based on a second outbreak later this year is about as likely as the baseline. I think it's hard to find any of these long investors out there who are embracing that probability. It could be fine or it could be terrible, and there's an equal chance of that. Now, I can't leave you without this fun quip from Ian Shepardson, who said FOMC members are now amateur epidemiologists musing at length on the question of how long the virus will disrupt the economy, which we sort of all are now, Joe. But I think the play in the market here is to take the Fed's money, but not accept their pessimistic forecast, Joe.